Good morning, good afternoon, good evening. Welcome back to Dan's Trades. As always, do your own research, not financial advice. I only had a short amount of time to be in front of the charts this morning. Today is July 1st, so it's the first day of the month, and it's the shortened NFP week, so I definitely was removing risk, only trading 2 micros today on this new account, same one. We'll take a look at it in trading view here since I have the OHLC indicators in here. This is 9:30 open. Really gross price action in the beginning, no fair value gaps whatsoever. We got the first presentation at 9:41 to 9:42, 9:43. This three candle pair made the first presentation, which is a very tiny one. And if you want, you can actually adjust this based on trader preference. You can come in here. Let me show you this. I don't usually do this. I just usually use the first one. Let me see if he still got it in this version. I know he had it originally. Oh, not in the OHLC, sorry. First presentation in the 32nd. So first presentation, let me see. I'm curious. Right here, you can switch to the second. Because it looks like today was that one, which kind of lined up as well to be an inversion. So both would have worked. Both were in play. The one I leveraged was the literal first one, so I'll pop that back so you can adjust that to the first, second, third, fourth, or fifth. Typically, it's kind of nice to use the more displacement one or the larger displacement one, but again, same theory applies here. What I was waiting for is I was targeting buy side up here. I was targeting the New York pre-market highs, or the 7 o'clock high here. As price had traded down, came back up, created these relative equal lows, and then the noise happened here, just overlapping candles, nothing, just waiting for first presentation. And then once we had the first presentation, we came down and swept this liquidity while making that first presentation. Then as it reversed back around, we had a balanced price range in here, which is basically the combination of a SIBI and a BISI. I'm going to turn one other thing on right now real quick because I haven't had this activated. Let's see if that actually shows. I don't think it's going to be, but no. Because we didn't sweep the 830 though. That's why. Okay. Perfect. So that would have been right there. There's the Venom potential candle and it wasn't there. So it's not a Venom model. But it's very similar because this portion of it is used in ICT's Venom model. Where these are nice signatures to see here with the balanced price range. And then the retracement and the response off of it. But I was waiting for the close above. So right here we had the verification of this being a inversion fair value gap, because here it's a SIBI, and sorry I made the mistake yesterday in calling it the wrong one, so we'll do it right today. Here's the actual inversion fair value gap. So the SIBI is inverted to act like a BISI, and price did not close back below it until later because it needs to sweep liquidity for it to do that. So I entered right here, wrote it up, took off the first trade as it was passing through these highs. So the first partial came off here. Then I was targeting the second one. Never happened. There was high impact news at 10 o'clock. You're going to see something very interesting here where this candle does not look the same on my top one futures account as it does in TradingView. So this is another fun day of different data showing different candles. Not a missing one this time, but just a different candle. So we're on a 1 minute chart here and you'll see the difference. Because on the other, I'll just wait. So when price did not get to my target and it was just starting to meander around, I just closed it out right here because I wanted to see it run right away. And I also had some things happening shortly after 10 o'clock at my house. So I didn't have time to stay in front of the charts. So I closed it out, did a little bit of mock-ups just for my journal, and then left the charts. Didn't get a chance to participate in anything to this downside. That's perfectly fine. I just got, so this, it was basically this nice scalp right here. It's very small stuff you got. Just goes to show you don't need a lot to be successful. It's just a matter of timing it. Time is the number one thing. So had I been looking at the 8 o'clock high, and bringing this buy-side liquidity pool over. That would have been a better exit. And I have that journaled for next time. I have that as a partial, but since I only had 2 contracts on, I was holding the final for the 7 o'clock high, also known as the New York pre-market high. Very interesting that after that high impact news, it did rally back up within 1 tick. Literally. So it didn't hit it. It got within 1 tick of it. That's why we have the pre-session high here and the New York AM session highs right there. That's what these 2 green lines are. And price has not been back there yet to this time. Right now, as it's later in the evening, it's 9 o'clock at night Central Time, 10 o'clock at night New York time. And that's what happened then. We had a sell-off. Interestingly enough, what did we talk about yesterday? I'll jump over to this one just to show you. Here's my top 1 account. Same liquidity pools drawn up. Here's those relative equal lows that were swept. Here's the entry right on a 1 minute pullback there. 15-second was an up close. On a 1 minute it was on a retracement. And there's the first targeted exit above that buy side liquidity pool. Again, I was targeting this one for the terminus. Here's the candles. Compare that to what we just looked at. I'm on Monday again. Hold on. So there, just to show you the difference in these high impact news candles and the way the data feeds drew. There's the candle at 10 o'clock on TradingView. There's the 10 o'clock 15-second. That's the 1 minute. So even if I move this back to 1 minute, we'll redraw back in. There's the 1 minute. So there's your comparison. Definitely not the same. This is like a doji with a tiny body. And price did not slowly come down here. 10 o'clock opened. So this is even off. This shows 959. That wasn't the 959 candle. That's really weird. So it went wham. I had my stop right below this, so I didn't get taken out. And then price was trying I could see it didn't want to go higher, so I just closed it out right there, just flattened it. Final one was 814. Both in profit, perfectly fine. Entered at 806, exited at 823 and 814. That was it. Didn't take any more trades. And then it fell down, hitting this sell side liquidity. What were we talking about yesterday? 22,600. Hello. Huh. That must be random. And then we consolidated after. I haven't even watched it since then, so there's what we're just doing now. Let's jump back over to TradingView. Should see what Asia is doing. So there's the market on close, massive macro for that. There's the AM drop. So it's in between the AM and the lunch sessions when it rated that 22,600 price level. Very interesting. So now they're not relative equal lows anymore. Well, they still are kind of, because it didn't get very far below it, but it definitely took out, that was the target for that liquidity. Think it's random? That's fine. To each their own. Lunch macro, New York lunch came across, coming back against the morning winners like it likes to do typically, more times than not. And generated some liquidity, dropped down, didn't take out New York lunch low, so we got those are still in play. And now we're just kind of, Asia's moving lower right now. We're in the middle of Asia session right now. So that was today's trading activity for myself. I'll take it. Nice little couple scalps. Still batting 100%. 2 days, shortened NFP week, so we'll see what tomorrow brings. Definitely still going to be on the lower end of the risk spectrum, just a couple micros until next week, or at least until after the NFP report comes out on Thursday, which is again a day early. Remember. So tomorrow's the early NFP, the ADP non-farm, and then Thursday is the massive liquidity injection. That's typically on Fridays. So look for that in 2 days, and then no trading on Friday. That'll probably cover it for this review session and looking at what cooked. Remember again, tomorrow was promised for none of us. Live for today. Take care.